Welcome to today's video. I'm going to be teaching you how to create a winning Forex strategy from scratch. If you have ever felt overwhelmed by Forex strategies, you are not alone. Everyone talks about signals, indicators, and secret setups, but almost no one shows you how to actually build a strategy from scratch. Until now, I'm going to be teaching you how you can build your strategy to success. I mean, this is the exact same thing that really helped me whilst I was building my own strategy. Some of you probably this might be your third strategy that you're trying to build now, because you might find other reasons that is making it not just work out. But this time around, you're about to have the real ingredients to prepare your own strategy and then no going back again. Let's get into this video. In this video, I'll walk you through the exact steps to create a Forex strategy that fits you, your schedule, your mindset, and your goals. By the end of this video, you'll learn how to choose the right market condition, define your entry and exit rule, pick the best time frame, backtest and improve your setup, and most importantly, trade like a machine, not on emotion. Step 1, define your trading style. Before any strategy works, you need to know who you truly are as a trader. Ask yourself, are you a scalper, day trader, swing trader, or position trader? Do you want to be at the chart all day or just once in a day? For most people that are working, being a swing trader to position trader would be a better option. But for those who are students who are a full-time trader, being a scalper or day trader, just like I am as a full-time trader, I'm a day trader, would be a better option. So you really just have to choose, and then we can now proceed. You also have to determine how much risk are you comfortable taking. For me, every time I wake up, I'm always comfortable taking 3% of my account, depending on the account size and the purpose of that account. So for example, if I've got an account of say $100,000, I'm willing to want to risk 3% daily. But for times that I have a $10,000 account, I'm willing to even go higher on the percentage. So sometimes on the $10,000 account, because I know the intention of that account is for me to flip. So I'll be willing to want to risk a little bit higher, like say 10% in a day. So let's say if it's an account of $100, I'm willing to even risk 50% because $100 is almost like nothing to me. But for some other person watching me, it might be everything. So you have to tweak the percentage based on what you really want as a trader and the reason for that particular account. What is the most important thing is your strategy must match your lifestyle or you will burn out. Step 2, choose your market conditions. Some strategies only work in trending markets. Others only shine in consolidating or in ranging markets. So for example, strategies that work in ranging markets are using like stochastic indicators and using the basic, all these oscillating indicators. But strategies that work in trending markets are trend lines. For another example, very good example is moving averages, most especially 50 exponential moving averages. They work in a very trending situation. Let me show you what I mean on the computer screen. Here is how a trending market does look like. Like this on AUDJPY, you can see this is a low, this is a high, this is a higher low, this is a higher high. So this is a low, but it's not as low as this one. So that's why it's called a higher low. And this is a high, it's higher than this previous one. So it's called a higher high, higher low, higher high. So an uptrend is simply defined when the market is making consecutive higher highs and higher lows. All right. While a downtrend is when the market is making a lower lows and a lower high. I'm going to show you both examples. So this is deemed a trending market. All right. So this is an uptrending market, and then this is a high, this is a low, higher low, lower low. You understand? So it keeps coming down. In a scenario where it's coming down, like this one, is a trending market. It's moving in one direction. That's a downtrend. So you can call this downtrend. All right. And then you can call this an uptrend when it's going up here. This is an uptrend. So you can call it a bullish trend, and then the downtrend is also called a bearish trend. Now let me show you a quick example of a ranging market or a flat market or a sideways market. So example is like the one you can find right in front of our screen here. Here. This is not really going in any direction. It's just flat. It's moving sideways. It's coming down, going up, coming down, up, down, up, down, up, at about the same range. So this type of one is called consolidation or a ranging market condition. You have to decide early. Are you building a trend following trading system, or you are building a consolidating or a ranging market trading strategy? Step 3, set entry and exit criteria. This is where most people mess up. A strategy without clear entry and exit rule is just gambling. You have to have them clear enough that you can explain that to a 5-year-old. Let me show you how to do that. Right now, I'm going to build a trend strategy for you. So one of the tools I'm going to be using is going to be moving average. I'm going to be using 50 exponential moving average. In order for me to get that, I'm just going to come to my trading view, click on indicators, and search EMA, which is exponential moving average. So I'm just going to tap on any one, then just get to change the first one, and then I'll get to change the figures. So I have a moving average right there, but it's not particularly exactly on 50. I'm going to click on the settings icon. I'm going to change my length to 50. Leave the styles blue, that's the color and everything, but the most important thing, I'm going to change it to 50 and tap on OK. This is just a simple trading system which I'm about to follow right now. So this is a 50 exponential moving average. All I just need to do is anytime price breaks above this line, like here, price broke above this blue line to the upside, this 15 exponential moving average, all I just need to do is to execute my buy order. So this is my entry criteria. So as it breaks it up, I put my stop loss a little bit below the breakout candle, and I target twice as much. So the breakout candle is 26 pips, all right? Then I just want to target twice as much as my reward. So that means I just want my risk to reward here to be 2. That's all I just need. So you can see how many candles took us there. It was almost there, but then this other candle was one that took us out. So it took about how many candles? It took us about just 23 bars, 23 candles to get there. And that took us about 5 hours, 45 minutes, and then you have made times 2 of that. That's an entry criteria. I'm just going to do just one more entry criteria before I tell you the other exit criteria. So let's do an example where it went on a short. So for short example, anytime you see a candle that breaks so strongly and that gives you a very high stop loss, that is another signal for you not to get in there. So for this type of example, I'll be avoiding that. So I'm going to look for the ones that the breakout candle is not so much, that I know that getting 1 to 2 risk to reward is very realistic. All right. So this one too is also very a long one. But here, this one that broke out is a good one. So I'm going to go in with this one. Upon this breakout right here, this candle broke out. I'm going to first set my stop loss on the recent high, and then the stop loss is 9 pips. I'm going to target twice as much. 9 pips times 2 is somewhere around here. That's making my target to be 18 pips thereabout. So how many candles took me to get there? Just about this much candle. Just 1 hour, 15 minutes, 5 candles to get there. You can keep doing that on and on and on. That is my entry strategy. See how very simple. I can explain this to a 5-year-old. He or she will be able to execute even in my absence. That's how your strategy should be. Now let's talk about the exit. Exit simply means what criteria or what conditions would you see that will make it want to hop out of the market. So number 1 is once it does my 1 to 2 risk to reward. So anywhere I'm risking 9 pips, if it does like 18 pips in profit, I should be out. All right. Then step number 2 of exit again is anytime market is breaking the structure. So for example, this one where I said I would have considered not getting into this one, right? Let's say for example, it broke down, right? I'd have gone in for a short right here and then put my stop loss here. In a scenario where I'm seeing that price breaking back up again on this bullish candle, I would have exited here, thereby cutting my losses really fast. This is how simple this system is. No feelings, just structure. If it meets the rule, just execute. If it doesn't, leave it. Simple. Step 4, pick your time frames. You don't need to watch 10 charts at once. Just keep it simple. Here are the common combos that you need to follow. The higher time frames are meant for the bigger buyers, the bigger picture. For example, the 1 hour or the 4 hour time frame. Then the lower time frames get to tell you when to get in for entries like 15 minutes time frame or the 5 minutes time frame. Let me show you how to execute that on your screen. Just as you can see, this is a trend following system that I've already taught you, right? So that means you can only use this system when the market is trending, not when it is ranging or in a consolidating range. All right. Now the next thing is, how do we know when the market is trending? That's why it's important to go to a higher time frame to be able to tell the bigger picture. So all I just need to do is to switch to my 4 hour time frame in this case, since I am a day trader. So this system best fits day traders and scalpers too. It also fits swing traders, but then they have to use it on a higher time frame. If you are a swing trader, your main trend should be determined on weekly, your current trend should be determined on daily, and your entry should be on 1 hour time frame. If you are a day trader just like me, your main trend should be determined on the 4 hour time frame, your current trend should be determined on 1 hour time frame, and your entry time frame should be 15 minutes, which is what I'm going to be showing you right now. So first off, on the 4 hour time frame, I'm about to determine the bigger picture. What is the main trend? So judging from this point to this point, what trend are we in? That simply means where is the market overall heading towards? This is obviously a downtrend. So that will mean that I'm going to be taking more of the down trades, the market that are heading, trades that are heading to the downside more often. But from this point to where we currently are, where is the market likely heading to? This is an uptrend. So the example I gave you guys now was from this point to this other point on 15 minutes time frame. So that's why I was doing more of the buy. You see how I'm able to use the higher time frame to determine what buyers I'm going to be taking on the smaller time frame. So on the 1 hour time frame, which is the current time frame, 1 hour time frame gets to tell me what action exactly is going on right now. Yes, we know the bigger picture is on a higher time frame, but where should I be paying attention to? At what point should I be looking at my screen? That's what the 1 hour time frame gets to tell me. So chart is always telling you a story of how the market participants are buying and selling, and how you also can be able to take advantage of this movement. So you can already see on the 1 hour time frame, it's telling us that yes, it's also actually trending up, but however, at this point, it's still trending up, but market is looking forward to break to the downside, and hence creating some sort of consolidation. See, market trends down, it trends up again, it trends down at this point, trends up again, and it's trending down at this point. Now it's trending up, it's back down again. So that's what 1 hour is telling us. 15 minutes exactly is for execution. So what you need to do on 15 minutes time frame, just to come to the exact point that, like right now, this current market condition is telling us is breaking down. So it's unable to break this 50 exponential moving average. Then this goes to tell us that we should be shorting. So we should just go in for a sell, put a stop loss above this high, then the market should tank. You have to use the higher time frame to tell where you are in the story, and the lower time frame to take action. Step 5, backtest and journal. You don't have a strategy until you have tested it. Use TradingView's replay tool or screenshot your setups. Track 50 to 100 trades before going live. Journal your entries, wins, losses, and why you took them. It is very crucial. This is what's going to help you on your long run. So in order for you to backtest, all you just need to do is for you to pay TradingView some amount of money, and they will allow you to backtest with this feature I'm about to show you. Now, a while ago, I told you the ideal thing I was supposed to do when market is unable to break here was to short, put my stop loss here. That stop loss would have been how much? It should have just been this much. I'd have put it somewhere around here. That means 4 pips to catch times 2, which is 8 pips, which is going to give me 1 to 2 risk to reward. And we see we are very close to that result. But that's not why I'm on the screen now. Let me show you why I'm here on the screen. Replay. So this replay functionality is only available for those who are paid. All right. So you can just click on the replay. That would enable you to delete some of the previous candle, and then you start backtesting. So this process of backtesting just lets you know what you would have done in that market condition if you were there using your strategy that you just built. So you have to test it over and over again. So let's try it. So we said anytime it breaks down. So now we have a breakdown with this one. So it broke down right there. So I will be shorting on this candle, and then putting my stop loss a little bit above the high. So that's 20 pips stop loss. So I must target times 2, which is 40 pips take profit. The system is that simple. All right. So let's watch what happens. It's loading. So replay just allow you to do. So you have to really test it this way. This is the only way you can be sure that your system is working. So we hit take profit there. So this is a good one. So I'm just going to go in, journal it on my journal, on my trading journal, and then be able to move on. All right. So you can do this about 50 to 100 times, and you'll be sure of the win rate. Sometimes if you have about 70% win rate, that's really a good win rate. If you have 80%, it's a good one. If you have 60%, that's also a good one. In the academy, I teach you not just only to improve your win rates, but also to manage them. It's not about just having a high win rate, it's how to maximize when you are right and how to minimize your losses when you're wrong. So that's where the risk management also comes in. So if you want to be a part of our academy, use this link that is currently on your screen, firepipsfs.com/plans to sign up right now. We have the online one and we have the physical academy scattered all over Nigeria. Online one, we have students from over 160 countries. We'll be happy to have you there, and you'll be glad that you join us. Step 6, risk management rules. Even the best strategy is trash without risk management. Never risk more than 1 to 2% per trade, depending on your account size. I'm going to break everything down to you right now. Set a daily loss limit, example 3 losses, and you stop for the day. And stick to your rules. No revenge trades. The goal isn't just to win, it's just to stay in the game for long. All right, so now If you have a good trading strategy, just like now that I've created one for you, without risk management is trash, right? You already know that. So the risk management is every day you wake up, you always have to determine how much of my money am I willing to risk today. So for example, for someone that has a $100 account, you should be willing to risk at least $30 of that amount of money to make twice as much, to make $60 per day. So that's not an ideal risk management that you want to adopt for someone that has a $10,000 account, because that's a lot more money than you have on a $100 account. So another rule of thumb for risk management is you want to risk enough so that the wins can be tangible. All right. You also do not want to risk too much so that the losses don't also break you too as well. So you have to learn to strike a balance between these two factions of thoughts. So now what do you need to do? Every day, since this video is targeted to a very wide audience, I want you to know, you already know how much you are willing to risk as a trader. So you have to set that as your daily loss limit. Anytime that amount of money is reached, you have to stop trading for that day. That's one very good risk management hack. And step number 2 you also have to know is that every day whilst you're trading, do not risk all of this money at once. You have to split your amount of money you're willing to risk into 3 fractions. So you probably might risk first once in your London session, the next one in your New York session, and then for those who are trade Asian session, you can also risk the last part in your Asian session trades. For me, what I do is I risk twice of that in my London session because that's my most active session, and one of that in my New York session. So most of the time, I'm always very profitable in my London session that I don't even need to trade the New York session. So you also can use that same approach. Here is the truth. A winning strategy doesn't just come from YouTube. It comes from testing what you learn and making it your own. Build it, break it, improve it. That's the circle. Do it again. Build it, break it, improve it. That is just simply this circle. And if you stay consistent, the result will come. Stay consistent, guys. That's what really pays. If this helped you, drop a comment and let me know what kind of strategy you're building or where you're stuck. Like, subscribe, and share this with a trader who is tired of guessing. Your edge isn't in the market, it's in your mindset. Keep building that mindset. Bye for now.